Right, Blair, thank you. The European Central Bank hiked its key interest rate at a record high yesterday. This may bring about the word recession again. Is this possible? Dan Kleffner is the president of Central Bank of St. Louis. He's with us this morning with his thoughts on all of this. Good morning to you.
Good morning.
Yeah, so we kind of keep hearing that R word creeping back in. Of course, at the beginning of the year, all the experts were kind of predicting maybe a recession. Hasn't happened. What are your thoughts on that?
Well, that's good news for all of us,
Yes.
first of all. The big thing really is the consumer has been strong throughout the post-pandemic economy and continues to be very strong. And the consumer really drives the economy in our market. We're finding that our consumers that bank with us and around the country still have a lot of liquidity left from the $4.3 trillion in stimulus that the government pumped into the economy. And so we've really benefited from that, and the consumer is driving the economy. And even though the Fed has increased interest rates to push back inflation, the consumer still remains pretty strong.
Yeah, absolutely. I mean, do you feel like we can be confident that there's not going to be a recession in the foreseeable future?
I would love to tell you that there won't be a recession in the future, Margie, but the increase in the rates and the continued increase in the rates could push us into a recession. But the Fed has done a really good job of trying to move us to a soft landing, as they call it. And a lot of economists didn't think that was going to be possible, but we're heading that way.
Yeah, so as we kind of go into 2024 and even beyond, I mean, what is the economic projection?
Well, again, I think that the consumer and banks and businesses are still cautious when they approach investments and when they approach expansion of their businesses. And so I think it's sort of cautious optimism that we'll get through it and be able to survive what the economists projected as a pretty sizable recession.
Yeah, these are some tough questions, but where is a good place that you would say people should be kind of looking to invest right now?
Right,
Yeah.
right. Well,
we won't hold you to it.
Yeah, right. So I'm a banker, not a stock market picker, but the stock market has been resilient. And so not that I would recommend that, but I would highly recommend that people remain liquid because we're not out of the woods with respect to the recession. And so in terms of remaining liquid, that means cash in the bank. That remains, it could be investments in short-term treasuries or things like that. And interest rates are really good for the consumer right now. So those that do have liquidity are getting paid for it.
Yeah, I mean, you still have people very concerned with credit card, the interest rates there, with homes, because it was so low. Now people are going, oh my gosh, it's at this interest rate. But really, it's not as high as we've seen it. I mean,
Historically we're still in really good shape.
Yeah.
It's interesting. 82% of homeowners have rates below 5%. 62% have rates below 4%. And I think it's 23% have rates below 3%.
Wow.
So those that do own homes and that have been in homes for a few years, they're benefiting from those really low rates. And those that are buying homes, again, historically the rates aren't so exorbitant that you can't afford a home.
All right, Dan Kleffner, thank you so much, President of Central Bank of St. Louis. We appreciate your time this morning.
Thank you, Margie.
All right, Blair, we'll send it back over to you.